Time for the day's business news, and for that, my colleague Yuka Royer joins us on set from our business desk. Hello there, Yuka. Europe's banking sector appears to have recovered from Wednesday's market downturn, which happened after Credit Suisse secured a lifeline from Switzerland's central bank.
Well, the news that Credit Suisse it will borrow up to 51 billion euros from the Swiss National Bank has assuaged some market fears. Switzerland's government is set to hold an emergency meeting today to discuss the crisis, according to local media. Shares in the country's second largest bank tumbled to a new record low on Wednesday after the lender disclosed weakness in its accounting controls, and its biggest shareholder, the Saudi National Bank, ruled out bailing it out due to regulatory reasons. Now, Credit Suisse shares jumped 30% at the open and are currently still up by more than 20%. This a day after losing a quarter of their value. As you can see there, European stock markets on the whole have also rebounded, with London's FTSE 100 rising around 1%. Paris's CAC 40 as well. The rise somewhat slowed down since the open.
Yuka, this isn't the first time that Credit Suisse has faced some troubles, though, is it?
Well, far from it, really. The banking giant has been plagued by problems, legal troubles and management issues, and has suffered huge losses in the past couple of years as customers pulled out funds. Catherine Viet takes a look at a long timeline of Credit Suisse's scandals.
Credit Suisse was founded in 1856 and is currently Switzerland's second largest lender. However, the bank has a history of finding itself in hot water dating back decades. It's cozied up to dictators, helping Philippine strongman Ferdinand Marcos in the 1980s hide millions of dollars stolen from the country by opening accounts under false names. More recently, the bank was fined $536 million in 2009 for deliberately breaching U.S. sanctions against countries including Iran and Sudan. Credit Suisse has also been charged in multiple cases of tax evasion in 2011, 2014, 2016, and 2017. The bank helped clients in the U.S., Germany, Italy, and elsewhere in Europe avoid paying taxes over a number of years. As a result, Credit Suisse was forced to pay more than $3 billion in fines to various governments. The bank has also paid steep fines for money laundering and a quid pro quo jobs for new business scheme in Hong Kong. But its biggest scandal might be money laundering for a Bulgarian drug smuggling ring. Last year, Credit Suisse became the first bank in history to undergo a criminal trial in Switzerland. The lender was found guilty of laundering money for the drug ring and ordered to pay a fine for its lax controls. Since 2020, the bank has paid more than $4 billion in litigation costs, while suffering around $4 billion in trading losses. The lender warned it does not expect to turn a profit until 2024. All of this has led to a crisis of confidence in the institution, with the firm losing about $147 billion worth of customer deposits in the last 3 months of 2022. At the end of last year, Credit Suisse announced a sweeping turnaround plan to revive its struggling fortunes.
So because of this, Yuka, a lot of people watching the European Central Bank that's meeting today.
That's right. Well, the ECB is set to announce its latest policy decision in a little over an hour's time, Charlie. And before the market turmoil, it was expected to raise interest rates by another 0.5 percentage point. But concern over the health of the global banking system are not likely to go away quickly. Credit Suisse's rescue came just days after two regional American lenders fell as rising interest rates affected their business.
Now, Yuka, TikTok, once again under fire in the news, this time again over concerns about its data collection.
That's right. Well, data privacy, data concerns because of its Chinese ownership. Some governments have been taking an increasingly firm approach to the social media app, worried that user data could be shared with the Chinese government. British media are reporting that the UK government is to ban it from government devices, as Beijing furiously reacted to Washington giving the app's Chinese owner ByteDance an ultimatum. Catherine Viet.
1.8 billion people use TikTok every month. The social media app's rapid rise in popularity has helped it grab more than $11 billion in ad revenue last year. But officials in the U.S. and several other countries say TikTok poses a potential security risk. Washington believes the data collected by the app about its users could be shared with the Chinese government.
For years, TikTok told regulators like me and other officials in D.C., don't worry, none of this data is stored in China. But then a bombshell news report that got internal communications from TikTok that showed, quote, everything is seen in China.
At the end of last month, President Joe Biden gave government employees 30 days to delete the app from any federal devices, with similar bans in place in Canada as well as EU institutions. And last week, a bipartisan bill was introduced in the U.S. Senate, which could pave the way to a full-on ban. India has already instituted a permanent national ban of the app. The White House says one way for TikTok to avoid such a course of action would be for Chinese parent company ByteDance to sell its stake. Beijing has accused TikTok critics of exaggerating the threat posed by the app.
The U.S. side has so far failed to produce evidence that TikTok threatens U.S. national security. The U.S. should stop spreading false information on the issue of data security, stop unreasonably suppressing the enterprises concerned, and provide an open, fair, and non-discriminatory business environment for enterprises of all countries to invest and operate in the U.S.
TikTok CEO is set to testify before Congress next week in a widely anticipated appearance.
And finally, Yuka, there's been a breakthrough in a trade dispute between South Korea and Japan. Tell us about that.
Well, the Japanese government has lifted export curbs to South Korea on some industrial materials that are crucial for the production of semiconductor chips. The measure was taken back in 2019 in response to South Korea's Supreme Court ordering Japanese firms to pay compensation to Korean victims of wartime forced labor. The decision to ease restrictions came as South Korea's President Yoon Suk-yeol arrived in Tokyo, reviving regular mutual visits after a 12-year pause.
That's all for the day's business news. Thank you, Yuka, for that update.
Thank you.